ANZ warns surging house prices could drive up interest rates. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Grab your stein of coffee and let's look at this article from news.com.au. ANZ executives warn surging house prices could spark an interest rate rise. Now, if we bring up the current cash rate, we can see it's sitting at 0.1%. I still think it's funny because 3% was considered an emergency rate. 3% was considered an emergency rate. I wonder if this will be the only time in history this happens. Now, before we jump through this article, I want to bring up this little piece from Forex Trading or FX Street. So, RBA's Kearns. House price gains are not a concern right now and are to be expected. Now, this is from Jonathan Kearns. He is the head of Financial Stability Development at the Reserve Bank of Australia, everyone. And I'm thinking we should do a video and go through his entire speech. We'll probably do a live stream of it when I'm feeling a bit better. But let's have a look at this. House price gains are not a concern right now, but could be a worry going forward, the Reserve Bank head of Financial Stability, Jonathan Kearns, said while speaking as part of a panel at a Moody's event on Thursday. So, and these are some additional comments. Watching borrowers' ability to repay, some households and firms will have struggles repaying debt. Well, I imagine a lot of people would have had struggles repaying debt if it wasn't for all of the mortgage holidays that people got, everyone. Or the businesses that were propped up with JobKeeper. So buffers are in place. Important, no deterioration in lending quality. Watch the RBNZA's experience with macro-prudential rules on housing. So we'll have to see, are we going to follow in the path of the Reserve Bank of New Zealand? So the ANZ is warning that this surge in house prices could spark an interest rate rise. Now, a lot of people, I mean, I myself, we're locked in at 1.99 for 4 years. I've done that simply because I want to, well, the closer I get to paying off my entire mortgage, the less likely I was going to be to spend any money on the renovations that we need to have. And it was kind of like my wife forcing me to spend money on a house extension. So it's quite specific to our family. But I'm sure a lot of other people have locked in the low fixed rate just in case, just to get a bit of certainty. But if interest rates are rising and then in 4 years' time that fixed rate disappears and all of a sudden you're paying going from 1.99 maybe to 5, maybe to 6%. Some people that won't make any difference really, but others it may be enough to really have an impact on their quality of life and cost of living and their ability to even service those loans. So, the supply and demand shortage that has driven house prices through the roof is unlikely to end anytime soon and could easily spark an interest rate hike, one of Australia's Big Four bank executives say. ANZ Chief Executive Shane Elliott says the current low interest rate levels have put home ownership front and centre in almost everyone's mind. Now, here's the question I'd put to all of us and to Shane. I think home ownership has been front and centre of everyone's minds all the time, regardless of these low rates. I think people are just seeing it as an opportunity to get in. Maybe it's their only chance that they feel like they can get in. Maybe they felt so desperate. We looked at another episode where a couple on the Gold Coast had saved 40 grand and it wasn't enough for them to get into the houses that they were looking at. Maybe people need to change their expectations. If you get something under 400 grand, guys, and even if rates double, and your wages stay the same, you should be able to service that if you've got a decent income level. You just cut back on the pedicures and the manicures and the foils in your hair. Watch that episode if you haven't watched it. They're making some good cost savings for a family, things I can't relate to, but feel very Gold Coast to me. So, that in turn has caused a major supply issue and sparked the surge in property prices across Australia, which has mainly been the only inflation within the economy, he says. Well, not when you're looking at the cost of meat and other things, which have also gone up. Here's the thing. Maybe there's a reason why people can't be bothered selling now. Maybe people want to sell, but then there's all the hassle of having to move. There's the potential of being locked down in a different state, and it can be a nightmare. The market's overheating. Maybe people who want to sell are going to hold off a little bit. It's hard to even find somewhere to rent right now. So it's just asset price inflation, Mr. Elliott told 3AW's Neil Mitchell on Thursday. There's a lot of money sloshing around, which was partly to do with COVID, partly to do with other things. So, but the traditional definition of inflation is just an increase in the money supply. And I'd argue we're seeing the candle-on effect manifest in property because all of the government stimulus and incentives are driving money to property. And that's the new, money supply is increasing and it's being increased through property. So that's going to bubble. That's what we're seeing there. So all that money has to find a home. Yes, exactly. And people are pouring it into assets. And they're pouring it into houses and also into equity. The Reserve Bank would, I imagine, be forced to act at some point. I mean, they've sort of said they're not intending to do this for a couple of years, but things change. The Reserve Bank met on Thursday for its regular monthly meeting and left interest rates unchanged at a record low of 0.1%. The RBA said interest rates would remain steady while inflation stayed below the target level of 2 to 3%. On the same day the RBA met, the REA released its new price index report showing values for homes along the eastern seaboard had risen by more than 5% on average over the past 12 months, with the pandemic sweeping the nation from March last year. Well, I don't know about you, but my property's lost about 20%. The bank's valuation has dropped because the guy across the street sold it for less than they anticipated for. So boom, all of a sudden, I've lost hundreds of thousands of dollars off my house, which is kind of now in line with what I actually expected it to be. It was a bit of a fantasy of what the bank's valuation was. But it makes you, it has that wealth effect. I've trained myself, though, not to believe it, so it's not working on me. Maybe that's what we all need. The biggest gains were in Sydney, where house prices jumped 6.4%, although apartment prices lagged behind at 0.1%, according to the REA Price Index report. So, Brisbane's house prices jumped 5.8%, while Victorians increased 4.6%. Overall, house prices have increased 6.9% on average over the past 12 months across the country, more than triple that of apartment values, which increased 2.1%. Australia's inflation for the December quarter was 0.9%, the RBA said. The REA's Director of Economic Research, Cameron Cusher, said rising consumer confidence was built on interstate borders reopening and would likely further improve as the vaccine was rolled out. Price growth in capital cities has been stronger than in regional markets over the past 2 months, so it will be interesting to see if this trend continues as vaccines roll out in Australia and we head towards a new COVID normal. He said, I hate this term. I hate this term. Just say normal as we go back to normalcy. Sorry guys, I'm still recovering from the flu at the moment. And yes, it is just the flu. That still exists, guys. It still exists. Mr. Elliott said homeowners may be grinning with the surge in house prices, but there was a downside to it. If you're an owner, it probably feels pretty healthy. If you're trying to get in, it probably doesn't, he said. I think extreme moves either up or down are never probably very good if they're sustained for a period of time, because you start getting real social and political problems as a result. I think we're already getting that. We've got a whole generation that are disenfranchised with all of the institutions in our country because what I would consider is an expectation of a good family quality of life, just having a house and raising a family, is beyond people now. You can't have it with the average person. I think some of that could be that people just need to adjust their expectations. They're thinking they're going to live in their final house right in the city when they're not earning enough money, to be quite honest. We can't all be living the rock star lifestyle. Some of us got to go out in the suburbs and buy a crappy place and then upgrade from there. Isn't that what people used to do? Besides house prices being a talking point during the pandemic, so has been the move away from cash, Mr. Elliott said. Cash withdrawals fell 22% over the year, but then contactless, so using it, who cares? It's just convenient to not use cash. So long as they don't ban it and cash still exists, I am happy for it. So, there we go. ANZ warning of a surging house price. Keynes is not concerned, but it may be an issue. What do you reckon, everyone? What do you think? Do you think they'll ever be able to actually raise rates again? What would be the political ramifications if they did that? There might be a correction in the housing market. We can't have that in Australia, can we? As always, thanks for watching. Please like, share, subscribe to the channel. Let me know your thoughts and opinions in the comments down below. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can support us using our affiliate links from Amazon, eBay, Independent Reserve or AussieBroadband. You can buy merch from HeiseSays, use gold parts from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great day. I'll see you next time. Bye for now.